Good morning, everyone, and welcome right here to BNSN. I'm Avan Dabash. As we take a look at the equity markets, it clearly seems that the global worries seem to be mounting. It's a gloomy Monday across the Asian markets. Remember, the lira crisis continues to weigh on European banks as well as global currencies. We're currently staring at a level of about 11,367. No major gashes, but down about 0.5%. So clearly, it's the second straight day running that we're seeing selling pressure on the index after an absolutely terrific run all of last week. The mid-cap index is down 60 points and small caps as we speak down 0.7%. Lots to chat about. Let's get straight down to business. Here are the top headlines at this hour. Well, whole host of results yet again due today. You've got Tata Steel among the big wigs. Other than that, Lemon Tree, Gati, Oil India as well as Godrej Industries among the lot that will be delivering their numbers. Meantime, check in on the big news that came in of Paresh Tathankar's exit on HDFC Bank. Post-market hours on Friday, what our brokerage is saying. Citi says that there are chances of an external candidate as a new managing director, that the exit could create some short-term disruption. Nomura, in fact, is of the view that the exit is a short-term negative. Meantime, Coal India has put out a pretty stellar report card. The profits have grown 60% to 5,700 odd crores. Top line growth 22,597 crores. Margins have grown to 25%. Meantime, SBI and brokerages are reacting to the numbers. Macquarie has said that it's a neutral with a target at 281. They're saying that they're cutting the FY19 EPS estimates sharply. Nomura has a buy rating with a target of 360. PVR is a big newsmaker today. They are set to acquire SPI Cinemas in a cash calm stock transaction that's valued at about 850 crore rupees, and this is going to help strengthen their presence in the South India market. And watch out for Jet Airways, as sources say that the auditors find the airline not to be a going concern. That not being a going concern means that they are unable to carry out their transactions. BSR and company have found a complete net worth erosion. And remember, the aviation regulator, we understand, is going to conduct a financial audit of Jet Airways. So things definitely looking very turbulent for this company. Those are the top stories then, and the equity markets, as I said, are looking a little bit tempered this morning. A whole host of big drags on the screen, and that's led by Indiabulls Housing. You've got Vedanta, which is currently in the red. SBI is having a bit of a tough run. The oil marketing companies aren't doing a whole lot. Behemoths from the oil and gas space, so that's ONGC as well as Reliance Industries. Both of those stocks are under pressure, down about 1% as we speak. But let's keep it then with some news coming in, and we understand that the Finance Ministry has held a meeting over the weekend. This is in order to resolve the ongoing UTI AMC deadlock. Who is the meeting with? Has any headway come about? Let's take it across then to my colleague Ashwin Mohan, who joins in with what could potentially be discussed in this meeting. Ashwin?
Good morning, Van. So we are dealing with the first break, the news that T. Rowe Price, the foreign shareholder in UTI AMC, had taken the legal route and dragged LIC and the three public sector banks, SBI, PNB, to the Bombay High Court. There are essentially three issues of the continuation of the CEO, the fact that the Indian shareholders had not reduced their shareholding to below 10% in UTI AMC as per the mutual fund regulations. And of course, there was a lack of clarity over the IPO. Now, what we're given to understand from sources is that the Finance Ministry has clearly taken note of this, tussle between T. Rowe Price, LIC, and the three public sector banks. And over the weekend, we're given to understand from government sources that there was a high-profile meeting that was held by the Finance Ministry to discuss a possible solution and resolution to this issue as soon as possible. Now, we're given to understand from sources that the Finance Ministry held a meeting with T. Rowe Price and representatives of LIC, PNB, Bank of Baroda, and SBI. Amongst the issues that we discussed was, of course, the timing of the IPO, because T. Rowe Price's main concern has been that because there is a lack of clarity regarding leadership at the top, the IPO might be delayed. So the fact that the IPO of UTI AMC should happen before March 2019, that was one of the major aspects that was part of the initial round of talks. The commitment that T. Rowe Price expects from the other shareholders to reduce their shareholding to below 10%, which is LIC and the banks, that was also discussed. And going ahead, there were also a few concerns that T. Rowe Price had expressed regarding certain members on the board of UTI AMC. They felt that certain members of the board were not independent. So these issues were also discussed. But keep in mind that this was just a preliminary and initial round of discussions that the government or the finance ministry has held with these stakeholders because they want this situation to be solved as soon as possible. We're given to understand that there could be a second round of fresh consultations, and during that second round of fresh consultations, there might be some sort of finality on the proposals. Because at the end of the day, the government doesn't want litigation to continue in this case. As we speak, Aman, interestingly, there is also a hearing in this case which is scheduled to begin any time today at the Bombay High Court. So we'll keep you updated on that as well. Back to you.
Thanks very much for giving us all of those details. Fairly important to monitor at a time like this with the deadlock that has been going on for some time, as well as in light of CEO Leo Puri stepping down. We'll have to wait and watch as to what exactly is discussed in this meet. Well, let's move right on then and focus in on earnings. Sequence Scientific has delivered its numbers. The adverse forex movement has affected the overall earnings momentum. Profits have lowered this time around and margins have contracted. Manish Gupta is Managing Director and CEO of Sequence Scientific, now joining in on the show. Manish, good morning and thank you so much for taking time out and being with us on ET Now. I understand that the regulatory changes as well as the adverse forex movement seems to have dampened momentum this time around. Can you just tell us, are these concerns ongoing, or do you believe that this was just a one-off?
No. So fundamentally, I just want to correct you. While it is comparatively lower than the last quarter or Q4 or last year, but overall on a Q1 basis, quarter-on-quarter basis, we have actually grown 21% in revenue and a little over 70% on the EBITDA side. So the business is on very firm footing. There was a small headwind relating to Turkey, which we are all aware, and that is the one which has caused a sub-damping of the profitability.
Okay, but now can you give us a sense as to whether or not this is a one-off, or are we going to see these kind of concerns continuing when it comes to the forex movement or the regulatory changes?
No, so regulatory change was a one-off and we expect a recovery from Q3 onwards. Certainly that is something which is kind of correction of inventories in the system, but nothing more than that. As far as currency is concerned, I think none of us can really predict that. What is happening in Turkey is something unprecedented and is fundamentally a war between the two prime ministers. Having said that, the attractiveness of animal health industry in Turkey is paramount, and it is as big an industry as in India. And therefore, we are very confident that things will be normal by Q3 as far as Turkey is concerned.
Okay, just to focus a little bit more about Turkey, because we understand that, it's the single largest geography for your formulations business as well. And when do you think that sales in Turkey will be back to normal? Is it going to be back to normal by FY19, by the end of FY19?
Yeah. So again, small correction. Spain is our largest market and not Turkey. Turkey would be accounting for less than 10% of our revenues, while Spain will be a little larger. Having said that, we do expect restoration of normalcy in Turkey by Q3.
Understood. Now going forward, let's also talk about new product launches, geographic expansion. What is on the cards?
So certainly we are creating a very valuable business as far as animal health is concerned. We are already present in about 40 countries. Between Q2 and Q3, we'll be adding two very important geographies to this, which is France and Ukraine. France is the largest animal health market in Europe, and Ukraine is the 9th largest animal health market. So both are very interesting markets, which will be commercialized between Q2 and Q3 respectively. Eventually, next year, we should have footprints in US and Australia, which are the two missing geographies in our strategic intent.
All right. Give us a sense as well as to what we can expect from your overall API business, the formulations business, in terms of probably internal growth that you're penciling in for Sequence Scientific.
So we have been reiterating that we shall maintain a mid-teens growth in our revenues and about a 200 basis points margin improvement year on year over the next 3 years.
Wish you all the very best. Thank you for giving us more clarity on this overall Turkey regulatory change, what it means for your business, when it could return back to normalcy, as well as the growth outlook in terms of your expansion plans. Sequence Scientific, no doubt, has been impacted by an adverse quarter, but the management said this is only a one-off and things will recover by the end of FY19. Down 1.5% as we speak. Well, right back to Buy Now Sell Now, Shahina Muqaddam as well as Manas Jaiswal with us. Manas, let's quickly get in your top recommendations. What are you advising this morning? Okay, we seem to have lost that audio. Nonetheless, let's take it across to Shahina in the meantime. And Shahina, take us through your outlook on the markets right now.
I think the market is in a bit of a consolidation phase. I believe there is some negative sentiment, slight negative sentiment, and I think it is more to do with the global factors. As you mentioned, we have problems, a lot of problems in the Middle East. You have Turkey, you have the trade war between US, China, and you have overall crude prices that may move inch higher. As and when the crude ban for Iran comes in. So all these factors are likely to put a pressure on the upside. But on the downside also, I think it is limited because the numbers are expected to be good. We have started seeing good numbers coming in from companies, as well as we see the monsoons are pretty good. So the rural demand should pick up for for overall sector, especially FMCG, consumer durables. So I think the overall sentiment is a slight mixed. It's neither very positive, neither very negative.
Okay. Let's get down then to Manas's recommendations as well. And Manas, what are the 3 buy calls you have?
The first one is a buy call on Mindtree because a few weeks back we saw almost 200 rupees correction in Mindtree, and for last I think 2 weeks stock had been facing resistance near to 970. Today it has given a clear breakout above 970. So I think today you can see some support from IT stocks also because of positive cues. So I think stock has potential to test 1015. So take a long position here and keep your stop loss below 954. Second is a buy on Godrej CP because stock has been taking support near to 1280, 1270 for last I think 1 month time, and even this time after a small correction stock has taken support over there, and we are seeing a lot of buying interest at lower levels. So I think stock can again come in the range of 1350 and 1360. So take a long position here and keep the stop loss below 1290. And last one is a buy call on National Aluminium, where stock has been making higher tops and higher bottoms from the level of 55 rupees. Yes, we have seen some correction on Friday, but again today it has taken support near to 100-day moving average, and it has bounced back sharply with great volumes. So I think the stock has potential.
Right, allow me to come in there, Manas. We have the management of PVR standing by to talk about the big acquisition of South India-based SPI Cinemas. Let's connect with Mr. Ajay Bijli, who is with us right now on the show. Good morning and thank you so much for taking time out, Mr. Bijli. Let's talk a little bit more. Congratulations on this big acquisition. Definitely helps increase your footprint in the southern markets. Tell us what is the total value and the timeline of this deal.
Well, basically 71% of the equity stake is being taken for around 633 crores. We are paying to the promoters, and it's a stock and cash deal. And we are also issuing 1.6 million equity shares to the promoters. So the enterprise value of the deal is about 1,000 crores.
Okay. So what about the financials of SPI Cinema? What are they currently at? What is their overall debt position? And what does this buy bring to the table for you?
Well, it's a very profitable asset, compliments to Kiran Reddy and Surup Reddy, the promoters of, they made a very enviable brand in Chennai. It has a turnover of about 300 crores FY18, but going up to 400 crores in the next year. And it already generates an EBITDA of 63 crores, which will go up to about 100 crores next year, 90 to 100 crores next year. They operate about 68 screens. And out of the 68 screens, 8 more are opening very shortly. But most of them, other than 5 in Mumbai or Maharashtra, most of them are in South India, Chennai, Coimbatore, Trivandrum, Varangul, Pondicherry, Guntur, and Bangalore. And they run at a very high occupancy. They run at 58% occupancy, which is the highest probably in the country, and get about 12 million people on an annualized basis. So I think together with our number of people who come, and we should be touching about 100 odd million people next year, and which makes us, as some of the newspapers have reported, the 7th largest company in terms of visitations.
Oh yes, indeed. Very iconic properties in the south. 100 million footfalls is what you're looking to touch. So what exactly is the outlook in terms of your total screen count? What are you looking at? What is the targeted screen addition plan?
Well, this acquisition takes our screen count to 706 screens, and our target always has been that by 2020 we want to achieve about 1,000 screens is what we're looking at.
1,000 screens by 2020, that's the target that you have. What about funding of this acquisition? How do you plan to fund this? Will you look at fundraising? Do you have enough cash on your books?
Yeah, if you've gone through basically the press release that we came out with, through the internal accruals, we will be paying about 385 crores, and there will be a new debt that we'll take of 150 crores, and rest of the deferred consideration, which is linked to some milestones, so that totals to 633 crores, as I mentioned earlier. And then there's a 1.6 million shares in stock that we are going to be issuing to the promoters.
So will the owners of SPI Cinema remain a part of the business?
Yeah, they'll end up holding close to about 3% equity in the merged entity, and then they will, of course, they've done a great job, and we want them to guide us through the transition, and also, play a role in they've got a 100 screen pipeline also that they've signed up over and above the screens that we're acquiring just now. So they'll have a role to implement those screens, and also give us a strategic guidance, because now a great platform has been set in South India, which is the most under-penetrated multiplex market in the country today, and we'll seek their guidance and to basically expand our network in South India as well.
So what is the outlook on your average ticket prices, on your expected footfalls going forward post this acquisition?
Well, average ticket price, Chennai already has a ticket control. The ticket prices are roughly at about 150. So that continues to remain the same, and we haven't done a blended what the ATP is going to be. But I think there's not going to be much difference in where we are currently. I think the main difference is going to come through revenues and EBITDA, which is and the value accretion that's going to happen with this acquisition.
To move away from this acquisition, there seems to be a bit of lack of clarity when it comes to the overall issue of outside food being allowed in theatres. I understand that it's been positive in terms of Maharashtra, but just can you give us a sense of the rest of the states, and what is, of course, the impact on your business then?
Well, the matter is still sub judice. There was a hearing of Supreme Court you must have read about on Friday for J&K. There we got an interim stay. But for the rest of the country, it's still a sub judice matter.
Worried that, potentially this could have an unfavorable verdict, because that would be detrimental for the business?
No, we are not. We are very confident that a fair decision will be taken. So as I said, it's a sub judice matter, so I just don't want to comment on it at all.
All right, we'll let you go on that note. Thanks very much for taking time out and joining in, giving us clarity on this acquisition. It's definitely going to be a big game changer in terms of your overall footfalls, in terms of your screen addition plans, as well as your reach in the south. And we will wait by as to what exactly emerges with the matter for outside food being allowed in cinema theatres. As of now, as Ajay Bijli said, the matter is sub judice. The stock price, though, of PVR not really taken well into this as we speak, down 2% in trade. Perhaps in terms of the consideration that they've doled out, the street is not too pleased. Well, let's shift gears and get straight to the viewer queries. Balaji Ramamurthy from Bangalore has a question on Tata Motors. He is with us on the phone line, I believe. Balaji, okay, it's an email query, so let's just take that on board. He's got 1,300 shares at a price point of 374 and now would like to know what the view is for the long as well as the short term. Well, Shahina, it's been nothing but fairly negative in terms of the outlook for Tata Motors with respect to their international, their JLR operations. The China numbers came in lower by almost 50%. What's the road ahead? Because many investors are in the same boat, having picked up Tata Motors at 350, 370, etc. What should they do? We don't have Shahina. Let's take it across to Manas. And Manas, what's your outlook on Tata Motors?
See, we have seen big underperformance in Tata Motors recently, and I think in this year, the stock has already corrected almost 45%. Now, stock has been making lower tops and lower bottoms from the level of around 425, and still the stock is looking weak because stock is trading below the low of 2016, which was 265. So I think till stock is trading below 50-day moving average, which is placed near to 275, I think any bounce back would be a good exit opportunity from the long position. So I think any recovery near to 255, 260, that would be a great exit opportunity from Tata Motors, because looking at the charts, I believe that stock can even come in the range of 220 to 200.
Okay, that's the view coming in on Tata Motors based on on technicals, but it would be better to understand this from a fundamental standpoint. You know, Shahina was talking about the JLR numbers, which haven't been all of that encouraging, and a lot of investors who have picked the stock up at a high level. What do they do?
I believe one should hold it. I have also purchased it in the last couple of months and I continue to hold it. Basically, yes, the numbers were very disappointing, but I think it was more on a one-off thing, like huge forex loss. So I would continue holding this. Yes, there are problems with JLR. Yes, there are problems with global trade between UK and US, and that is likely to have some negative sentiment. But I think the new product launches, both in the Indian market as well as in the UK market and US market, China market, I think these should be the growth drivers, and I think valuations are pretty attractive in the four-wheeler space. So I would continue holding Tata Motors. For the shorter term also, I think the stock can bounce back to about 270 levels, but if you hold it for the longer term, I have a target of close to 330, maybe in the next 2 to 3 years, 2 years maybe.
All right, that's the view coming in. So despite what's going on, Shahina seems unperturbed, believes that for the long haul, this stock can be held on to and keep this one in the portfolio. Shahina, since we're a bit crunched on time, let's get straight to those wealth creation ideas. What are your top bets?
In fact, Tata Motors is one of my top picks because of the valuation. Another company in the same group, TCS, I think the numbers over there were very good. We have a 10% YOY growth that we saw, and I believe the BFI segment has done very well for them. And with a valuation of just about 22 times FY20, I think the valuations are in its favor. So we discussed Tata Motors, TCS, and another stock that has done reasonably well in the last couple of weeks is ICICI Bank. Here I believe it's taken a pause, but I personally have invested in it, and I believe that if you look at the balance sheet, yeah, there are problems, but I think most of the stressed assets have now been accounted for, and we have good, the provision coverage is improving, the balance sheet is improving. Going forward, numbers should look better. A very strong retail play, I would buy ICICI Bank with a longer term investment perspective even from these levels.
Okay, two stocks that have definitely been under the cloud for not the best fundamental reasons. You believe that it's a good time to buy them on decline, Tata Motors and ICICI Bank. Shahina as well as Manas, thank you for guiding our viewers and sharing with us your outlook on the markets. Let's take a break. Coming up next, Market Fatafat.